Now, a lot of people love MSTY from YieldMax ETFs because it pays out monthly dividends and it also has over a 1% distribution yield, which is going to give investors a ton of income. And so far, year to date, it's been performing extraordinarily well. But Defiance ETFs just came out with their first MicroStrategy ETF, and this one is going to be different because it pays out weekly dividends, which has gotten a lot of attention lately because many people love when these funds pay out weekly. It's pretty much like a weekly paycheck, and it's going to help with those bills and other expenses that a lot of people from income investing are looking to achieve with. So let's go over what exactly this ETF is by Defiance ETFs. So MST is the leveraged long plus income MSTR MicroStrategy ETF. The investment objective of this ETF is it's going to seek long-term capital appreciation, which is always a good thing, with a secondary objective to seek current income. So that's going to be a very solid strategy because as income investors, we're not sure how these ETFs are going to perform in the long term. We do want some capital appreciation somewhat, as well as receive reliable income, which is what this fund is promising. And they're going to be able to achieve it by using a leverage strategy, credit calls, spreads to generate income and manage risk associated with the fund's leverage exposure. So it's going to have leveraged exposure. As we mentioned, MST aims to deliver approximately 150 to 200% of MicroStrategy's daily price performance. So this is going to be a very volatile ETF, which is going to be good for the income that it's going to be generating. Because remember, the more volatile the underlying stock is, the more income we're going to be paid in distributions. And by utilizing a call credit spread strategy, the ETF seeks to generate high income, which is going to be paid to investors every single week. And it's going to provide investors that regular cash flow that everyone's looking for, as well as a potential buffer against declines. Because remember, when the stock market declines, dividend investing is the way to go because you're still getting paid those distributions, even though the stocks are dropping. And of course, we're getting Bitcoin exposure through MicroStrategy. So if you're into crypto, if you're into Bitcoin, this may be a great ETF that you should definitely look out for. It's a company known for its significant Bitcoin holdings, and MST offers indirect access to Bitcoin's market trends without the need to own cryptocurrency directly. Of course, we have a disclaimer. Even though it has all these promises, it may not deliver, but it's going to try as best as it can. So the disclaimer is it may not achieve daily investment results before fees and expenses. It corresponds to 150 to 200%, and it may return substantially less during such periods. If we take a look at the top holdings, we have some MicroStrategy swaps. We have a call option on MicroStrategy. We have some treasury bonds, which is also going to help with that income. A lot of these income ETFs are supplemented with treasury bonds to help with that dividend yield. And then it does have some of these other call options. So it's going to be using a credit call spread, which is when you buy and sell call options at the same time and receive a credit for opening that spread. And of course, we don't have any distributions yet. This is a very new ETF, so it's going to be interesting to see how it performs. And personally, as well as a lot of other people, are going to hold off from buying this ETF before we know what exactly it's going to pay out in distributions. So if you're looking for something that's a little more proven, still relatively new, it's about 2 years old, MSTY is still a great option, especially since it's at a price point currently at about $23 per share. In my opinion, it's always good to buy this ETF once the share price is in the low 20s because it's going to give you a distribution rate of over 100%. And we can see our last distribution per share was over $2 per share, which is going to make a lot of people happy. I personally have 300 shares of MSTY, so I've received over $600, almost $700 in distributions alone for that month. But if you're willing to take a risk, you can buy this ETF. It doesn't have that much price action yet. Released at $20 per share. It's currently at $21.82 per share. So it does have a capital appreciation of about past 5 days, 6% in the past week. So a lot of people have made money on this ETF already due to capital appreciation, but that's not really why we're in this ETF. We're in it for the income that it's going to provide, and it's going to be paying out monthly. So if you're willing to take a risk, you can buy this ETF early, but it's a better strategy to wait a few weeks and see what kind of dividends this ETF is paying out and see how the stock appreciation is going to play out in the long run before buying in a heavy amount. Of course, the main draw for this ETF is going to be that weekly distribution frequency. Because the more often you're paid out, the more often you're able to use that money immediately, whether you want to reinvest it back into the fund, withdraw those funds to pay off bills, or use those funds to just buy some other quote-unquote safer ETFs such as SCHD, which a lot of people are using. They're buying in those YieldMax ETFs such as MSTY and then using the distributions from that ETF to buy SCHD or even the S&P 500 index VOO. But the difference between these ETFs, besides the distribution frequency, is going to be that it's leveraged. So this is going to induce a little bit more risk, and that's how it's going to be able to distribute weekly dividends, because it's going to get paid a little bit more in option premium because of that leverage. And you do have to be careful with leveraged ETFs, because if the underlying stock does manage to stay flat, in those cases, you are losing money because of that leverage. But because this is using an income strategy with the cost credit spreads, that may be counteracted. So this is going to be an ETF that I'm personally going to be watching over the next few weeks and determine whether or not I want to buy some shares of this ETF. But because of how new it is, you shouldn't put in a ton of money unless you want to gamble it away, because we have no track record of something like this. But it does look like it's a good way to get exposure to MicroStrategy as well as Bitcoin. So if you're into cryptocurrencies, this is going to be one that you should keep on your watch list.